Let's talk about biases today and how you can be a better investor by at least being aware of these biases that you most likely have, that we all have. And you can be a better investor just by knowing that you have these, not even necessarily avoiding them, which may be impossible, but being aware of them is going to help you make better decisions going forward. So the first bias is confirmation bias. And that is, if you believe something to be true, you are going to seek out evidence that proves it so. So as an example, if you are a right-wing Republican, you are going to most likely watch more Fox News because it's going to confirm your already existing beliefs. Versus if you are a Democrat, you might watch more CNN, whatever it may be, to reconfirm your existing beliefs. You really, in investing, should do the exact opposite. What you should do is do what Charles Munger does, who is Warren Buffett's right-hand man. They've worked together for 50 plus years, is disprove yourself. Try to not confirm what you believe, but prove yourself wrong. That will help you make better decisions going forward. Recency bias. If I'm walking this way, where do you think my next step's going to be? You think I'm going to continue to go that way. But the markets don't work that way. If the market's been up for the last 6 weeks, it doesn't mean it's going up for the 7th week. If it's been down the last 7 weeks, it doesn't mean it's going down the next week. In investing, just because I take 2 steps forward, the logical thought is I'm going to continue to move forward. It doesn't work that way. And never think about your investments in terms of what they are doing, because they're not doing anything. It's unpredictable. They have done something. So last month, they maybe earned money or they lost money. This next month has nothing to do with what happened last month. And if you think in those terms, you'll just keep the big picture in mind so much better. So think about that, the recency bias. Anchoring. If I buy a stock for $25 a share and it goes to $80 a share because of phenomenal earnings and a great year, and they got a new CEO who's turned things around and it's been great. And then the stock goes to $40 a share the next year, and I buy it. I'm expecting that to go back up to $80 a share. Well, the reality might be that it's not worth $80 a share. It was extremely overvalued then, and they had 2 customers who accounted for 70% of their revenue, and those 2 customers didn't renew their contracts. And so now it's at $40 a share because it should be. Not because it really should be at $80, because it maybe once touched that. So don't anchor to any specific price. The worst example of anchoring I can think is when you're buying an engagement ring as a male, you're supposed to say spend 2 months' salary. Well, that's just people anchor to that. Some people cannot afford to do that. If you're living paycheck to paycheck, how can you possibly think that you should spend 2 months worth of your income on one single engagement ring? And maybe others, though, could spend 10 times that. That's just something people have in their head. There's many examples. One example was, what percent of African countries make up the United Nations? And right before they were to guess, they spun a wheel that had numbers 0 to 100. When they spun a number that was 25, their guess was closer to 10 or 30% of African countries made up the United Nations. When they spun 60, they guessed a much higher number. That's just a mental bias that you can have in investing that relates to what the price of a stock is. Overconfidence. People's belief that they are really smarter than they are, frankly. If I was to ask you, if I was to ask you right now, what percent of restaurants succeed? And you would say probably 20%. I don't really know the number. But if you ask every single one of those restaurant owners, what's the likelihood of their restaurant being successful? They'll tell you 95%. How good a driver are you? Above average? 90% of people say, yes, I'm an above average driver. We both know that 80–90% of restaurants fail, and only 50% of people can actually be above average drivers. We all have that belief in ourselves, especially when related to investing. We pick something that did well. We think that it's because of our own intelligence or whatever it may be, when most of the time it's probably because of luck. So just keep that in mind when trying to make decisions, and is it best for you? Is it best for your family? And then last, hindsight. And this is my favorite because everybody looking back could have made a ton of money, could have had the best return, could have made the best decision. But reality is, in hindsight, it's very easy to do. Everybody right now could look back and say March of 2009, it was the best time to put money into the market. But in March of 2009, you know what it took to put money into the market? It took a lot of understanding and a lot of discipline, and I didn't know very many people that our phones at that time were ringing off the hook with people who wanted to get into the equity market. So that's just looking back. Of course you could see it, but at the time it looks a lot different. Just as of right now, it could be the buying opportunity of a lifetime. I mean, we don't know that, but if I tell you on a day where the market's down 2% and I start calling and saying, now's the time to put all your money to work, it feels a little, uncomfortable. Now, I don't know that to be the case, and that's why we always have money in for the long time, in for the long run. But because the market's been down lately, most people are looking at this. You take that step back, my next step's probably going to be back. And the reality is you have no idea where it's going to go. So this is information I think is just important for you to incorporate into your own life and your own portfolio. We realize these biases in ourselves and do as much as we possibly can to avoid them as professional investment managers, as professional wealth management firm. So go to our website, bearwealth.com. Have a wonderful day. Call us if you ever need anything.